Welcome back, everyone. It's been a while since I've done one of these videos about a specific stock, but something was bugging me recently, and there's been a bit of weird price action. And then I saw something, well, this evening really, and I thought I should really do a quick video about Yellowcake, YCA, that is. This is the physical um, stock that trades like the physical commodity. And I'll get into what it is, what's bugging me, and what the thoughts are, what I saw right away. Okay, so what is it? Yellowcake, as I'm sure many of you know, and those who don't, well, we'll quickly find out. Yellowcake is a physical uranium fund, basically. Not fund, but stock. Their CEO called it a physical uranium ETF. I don't agree exactly, but basically, if you look at the GLD for gold, that's what they're trying to do. But because uranium liquidity is much lower than other markets and holding is restricted, there's a number of nuances that make it more difficult, their job compared to the GLD, for example. But basically, what they do is hold physical uranium. And their hope is that the price of the equity will pretty much track physical uranium and therefore provide liquidity for investors at any given time based major for the majority on the price of uranium. Now, in theory, Yellowcake or Uranium Participation Corp in Canada are fine ways to play the commodity space, well, to play the physical commodity, because I understand that the leverage inherent in many of the equities is not for everyone, and also the dilution and the it's a different complex, basically, physical versus the equities. And so I very much understand the willingness to just play on the commodity side, just play on the physical um, uranium. And if you wanted to use leverage on that, you could. But that's just how some people want to play it. And I agree, I've held in the past an equity that tracks physical uranium. I don't hold any right now. I moved into the mining shares or the junior mining shares. But it's it's a fair choice in my view. And so they do have a number of levers that they could pull with the buying and selling uranium to have their share price better track the physical price. And those levers also have the benefits of if the market gets a bit out of whack, um, benefiting the shareholders as they pull them. So one interesting note that is much of what separates Yellowcake from Uranium Participation Corp is that Yellowcake has two main agreements that I think are important to be cognizant of if you're looking at an investment in them. The first is that they have an option to buy 100 million US dollars of uranium per year for the next number of years. I think it's 8, I have to check. But for the next number of years, they can buy $100 million a year of uranium. But that is to say they will have to raise that money somehow for themselves and use it to purchase um, the uranium from Kazatomprom at a agreed upon price. So they're not just entering the market and pumping up the price. They're agreeing, then going to the market, then buying the shares. So there's definite benefits there. On the other hand, um, there is also an agreement where Kazatomprom has the option to buy back 1/4 of the initial purchase, so approximately 2 million pounds of uranium if the price exceeds 37.50. It could be bought back by Kazatomprom at a $6.5 million discount. And the interesting thing about the $6.5 million discount and the way that was worked into the deal is that it is incentivizing Kazatomprom to exercise that option when they might not, because they might have not, I should say, because if there weren't the discount, then buying back at spot price in order to fill the contracts is not maybe something that a producer might want to do. But if they're incentivized to do it, they're more likely. So it's just worth noting. So at an interview around the WNA, the CEO of Yellowcake said that it's not necessarily, I'm paraphrasing here, but he said it's not really his job to make calls on the direction of uranium. And that's fine. I can agree with that. I can say that makes sense. Um, he said that um, he would not try and time the cycle. It would be for the market to decide when when Yellowcake should buy more uranium from Kazatomprom or from the rest of the market, or do whatever based upon their share price in relation to the price of uranium. If their share price were at a premium, they could issue shares, buy more, exercise the options, whatever. Versus if they were trading at a discount, then presumably they could sell uranium and buy back shares. Basically, their mandate is to increase the pounds per share, pounds of uranium per share, that is, which makes perfect sense, to me at least. My contention would be that if that were true, I believe they should be selling uranium right now. And before you stop me, call me crazy, I know uranium's below 26 bucks and I know the fundamentals, I know the story. Before you tell me how crazy I am, think about it. What should they do for them? If their NAV is trading at a discount of above 15%, it was at 17 or maybe more percent at parts of the day the other day, what should they do for their shareholders? Well, in theory, it would make sense to sell some uranium and buy back some of their shares. It's like if they're selling uranium on the market for $26 about, and then they were able to then buy it in the form of their shares at $23. These are approximate numbers, but if you could do that, why wouldn't you? Yes, it might push down the price a little bit. Yes, it might make the uranium thesis take a bit longer to play out. But isn't that something that if you were trying to increase your pounds per share over the long term, isn't that something that should be done? Now, again, I don't know. Maybe their limit is more conservative, so maybe they need to be trading at a 20% discount in order to do that, maybe 25. Maybe they're not going to do that. I don't know. I don't know. That's just what I would do at this point. And again, don't hate me for it. It's just I have no horse in this game. I mean, actually, I do have a horse. It would be involved in them not doing that would probably be better. But yeah. And so now this is where the fun begins in the speculation of why might they be trading at a discount to their NAV, that is. And really here there are numerous possibilities. So I'm just going to cover three that I've heard or seen people talking about. The first is Brexit or pound uncertainty. And I'm skeptical about the degree to which this one is playing a part in that, yes, we don't know what's going on with the pound, but I mean, it's commodities and you could hedge currencies. So I don't know. I don't know how much I buy into this one, but it is the official story, I guess you could go with, in terms of pound uncertainty. This fund or company is based in London, trades in pounds, so you could argue that that's problematic for international investors at this point. So the next two-parter really is something that I started thinking about a while ago and really came to fruition, I guess you could say, yesterday, where what happened was on September 24th, a lot of shares traded, like something more like more than 10% of Yellowcake turned over in an afternoon, which is big volume. And it led me to thinking that it seemed like at that point one of their big shareholders, big funds, probably sold out. Now, did they do that because they changed their thesis or there was a problem? I was thinking, partially due to something else, that it could be a problem. Now, I didn't put two and two together until right now. Well, not right now, but maybe half an hour ago when I was reading something. Basically, one of their funds, one of the funds that own shares in them, named Arrowgrass, and yes, I'm doomed to at some point call it Arrowglass, but haven't done that yet. Anyway, Arrowgrass um, was a 6.8, I think, percent shareholder, and they sold out. Now, why did they do that? Well, I saw a story from a few weeks ago about them closing down their fund or being met with heavy redemptions, so they may be forced to close down their fund. So they liquidated their position in Yellowcake. Now, did the market know about this and know they would have to do that, so discount them? Maybe. Um, or did they just sell out when Yellowcake was trading at a discount? Now that's something we'll have to watch for to see if the discount narrows after this disposal notice. Now I'm going to be honest though, when I saw the big volume yesterday, um, after the fund, it seemed to me, sell out after trading at a discount for a while, I thought there might be a problem, but I didn't immediately think it would be with the fund. I thought there was a chance that there could be a problem with Yellowcake. Now, this may be just speculation or just random thoughts here, but why I thought that was because we're entering the fourth quarter of the year, and they have bought approximately a third of what they're allowed to buy this year. Now, that seems odd to me. Now, they could easily be just waiting for a better price, but with people that have done a lot of work in the space and even other people, I don't think there's too many people expecting the price to go down further in the fourth quarter of this year. You had all year, including a significant amount of time where Yellowcake was trading at or a premium to their NAV, where they could have raised money, versus now they're trading at a big discount, so they can't raise money. And now is with the time of the year where after 232, utilities and Cameco were expected to return to the market, thereby potentially pushing the price higher. So unless they had some variant perception within the space that as the year wore on, the price would go lower, why would they not buy more of their uranium earlier in the year? Unless they were having some problem there. Were they not able to raise enough money? Were they not able to buy all the uranium for some reason or another? Or is there some other issue? Maybe somewhere in the contracting, something didn't go right. I don't know, but that was what I was thinking once I saw the volume yesterday. Now, I haven't been looking as closely at Yellowcake as many other equities within the space because it's not at the top of my list, and I it's not where I would put money for physical, but that's mainly again a logistics reason. But simplicity basically doesn't have this as a place where I watch closely. So if anyone out there knows about something, feel free to let me know in the comments. But I haven't looked that carefully, but this is just my mind kind of gravitating towards this possibility. In conclusion, we're basically going to have to watch and see. We're going to have to see if the arrowgrass problem persists. Basically, will the discount to NAV close in the coming weeks? By the way, NAV, net asset value, for any, in case I didn't mention that at some point. But will that discount decrease now that the, so to speak, problem shareholder is gone? Or might there also be some other issue? And if the discount stays, then that might lead me to think that someone else or many other people might be questioning if everything's going all right as well. But either way, I think we can look at this discount, if it persists, as an opportunity for them to show that they are shareholder friendly. And again, it's not good for me if they do, but I think they should sell potentially small amounts of uranium into the market to buy back their shares. I mean, it doesn't really help me at all, but it would give them, in my view, some more credibility. But yeah, that is all I wanted to cover today. And so I hope you found something interesting. I look forward to hearing your comments, and I apologize if I sound sick. I am, and I also really hope to get to do more videos, not just one a week. I've been busy, but hopefully things might be cooling down a little bit, and hope to be doing more of these. So, hope you enjoyed. Have a great week. Until next time, good luck.